3 p.m. Eastern every business day. I give you stocks that we're looking at, stocks that we're trading that have had unusual accumulations of either calls, which are bullish, or puts, which would be bearish. So we're going to cover that and talk a little bit about spreads as well. And we'll do it all in 15 minutes or less. How about that? All right, let's get started. 3 at 3 presented by me, Jon Najarian. You want to follow me on Twitter, it's just at Jon Najarian. You can also follow my brother Pete at Pete Najarian. And Market Rebellion, of course, is the firm that we co-founded. The disclaimer says that this is for educational and informational purposes only. If you're just getting started in trading, well, why not go check out marketrebellion.com/get started. That is marketrebellion.com/get started. There you can learn about stocks, options, futures, cryptocurrencies. Our App Store goes live this month in the App Store with Apple. We have been approved. So you'll be able to have all of this cool stuff right there on your phone. You'll be able to get updates. You'll be able to watch or listen to as you're riding on the train, in a car, in an airplane. If you're working from your laptop, you'll be able to open it up and go through the various lessons and become a better trader. Whether you invest or whether you trade, if you know the strategies, you can take less risk and increase your odds of success. I encourage you to do that. And with that said, let's get to 3 at 3. All right. This one's from yesterday, of course, as you saw, with Microsoft at about 209. We talked about the July 210 calls being bought in big numbers from $2.12 to $3.20. I was in these. I was lucky enough to be in for about $2.60 on these. But even if you're in at the high end, let's say you got in at $3.20 when I talked about it on Unusual Activity or UOA yesterday. How did you do? Well, there's how you did. If you were in at $3.20, you could have got out for $5.70. You could have got out for $5. You could have got out for $4. I mean, in other words, you got profits all over the place on this one. It is still, as of this slide, it was still up 38% from yesterday's close of $3, which is a pretty nice return in 24 hours. So there's the first one of our updates. Bang. And then how about Tilray? Tilray, we talked about it. Stock was $7.13. They were buying the regular July expiration. How do I know regular? Because if it was the 10th of July, which is this Friday expiration, it would have shown as July 10. Instead, it just says July, which means regular July. That'll be the 17th. So in other words, it's a week and 3 days into the future when these calls would expire. They were trading for $28 a piece when you figure every option is for 100 shares, up to $45 a piece. And if you would have followed this trade, that's what they traded to, $1.07 today. Those are those July 750 calls, regular July expiration. They closed yesterday at 73 cents. They traded up over $1 today. I took half of mine off at 95 cents. Now, we'll see where it goes. They're buying actively still in Tilray. But as the market softened up a little bit, people perhaps deciding that they'd like to take their profits and run. So I took off half. I'm still in half. If you'd like to learn more about it, why not learn from a couple guys that have taught thousands of people how to trade? And again, it's remote learning, folks. You can do it from your PC, from your laptop, from your iPhone. You can do it remotely on your schedule. You don't have to be waiting for a class to go off. You take these modules one at a time, and as you pass each chapter's test, you move on to the next chapter. That's because we want you to know you really understand what was in that chapter. All right, first trade of our 3 at 3, and it is a big trade. How big? Well, let's see. Somebody bought the January 1440 calls in Tesla. And then they sold the January 17 calls against it 3,000 times. So that is a monster trade, folks. Monstrously big, that is, of course. Just for instance, if you paid $307 per option, a $307 option is what most people would be willing to pay for a stock. It's $30,000. So if you did 307 times 3,000 times 100, that's a $92 million trade. That's kind of worth following, isn't it? Now, what they did was they also collected $224 for selling the 1,700. So that takes down the actual out-of-pocket here by about 80 bucks. So instead of having $307 on the table, they've got 80. And then what did they do? They sold 3,000 of the 900 puts. So this is a bullish trade. They're going to own it between 1,400 and 1,700. And they're saying, you know, if it corrects and goes back to 900, I'll own it. Because they are short the 900 puts, which means that if they were assigned, if they were put, they'd have to buy stock at 900, no matter what price it sinks down to. So this is a pretty bullish trade, folks. I just wanted you to kind of see that. It's a bullish three-way, as we say, and it was done for a credit. Crazy, crazy. If this thing's 1,700 or higher, somebody's going to be a very happy camper because they stand to make $300 times 3,000 or $990 million on the trade. Bang. All right, let's get on to it. There's Tesla. Gives you an idea how much this thing moved. There's Tesla as it moves up basically from about 1050 to 1384 in the last few days, just the last few sessions. Amazing. Let's talk about Momo. MOMO. This is one I didn't get to at the halftime report today, but Momo is a Chinese stock, and it has some Momo, but it's kind of stalling out here at about the $20.30 level. Let's see where it is right now. MOMO. $20.60. So it's up about 30 cents, roughly 25 cents from when we saw this. But they bought 10,000 of these calls, the July 2050 calls. Now, those are calls that expire this Friday. You remember me saying how we know that. The 10 is in front of July. That is the expiration that they're trading, not regular July expiration. This week, they think they have time critical information when they're trading stuff that expires this week. So they bought 10,000, which is 1 million share equivalent because every option's for 100 shares. And they paid 53 cents up to 80 cents for these options. Bought a lot of them basically at the money calls for 53 cents up to 80 cents. All right. There you see the gap that occurred yesterday from last Friday, because it closed at roughly 18. It gapped up to 19.20, so $1.20 to the upside, and just kept going. Closed nearly at the highs of the day yesterday. Today, it's been meandering, trading kind of sideways, up a little after a down opening, after people took some profits, but nonetheless, still at $20.50 here. So these calls, bought for 53 cents up to 80 cents, are now the at-the-money call. Instead of just out of the money, they're now at the money. And obviously, if we get a move to like 21, 22, the right to buy it at 20.50, because that's the strike, not 20.50, would be worth at 21. It'd be worth at least 51 cents, at least 50 cents, sorry. And at 22, it'd be worth $1.50. So if you were into these for 53 or 80 cents and it trades 22, you're probably looking at a double or a triple on such a move, which is not an extraordinary move for Momo, a stock that has had some pretty good upside moves over the past several months. Bang. Let's get to our third of our 3 at 3. That one is Macy's. Now, Michael Farr, who's a friend, doesn't like the trade. He says, not with my money, John. I understand. We've been in this one before. Last time we saw this kind of activity was when the stock popped from $6.48 up to and through $9. Does it happen again? Does the article in Barron's over the weekend that said that Amazon might be looking at these guys, looking at Macy's to take out the battered retailer and then have a combination of distribution center and a bricks and mortar retailer? Do they? Maybe. They bought 13,000, that's 1.3 million, almost 1.4 million share equivalent, the right to buy the stock until the 24th of July, because you see that there, July 24th is the third expiration from right now. The first one is this Friday. The second one is next week, the 17th. The third would be the 24th. So they've bought an awful lot of these calls, the 750 calls. They paid under 20 cents for some, paid as much as 28 cents for others. As always, every option for 100 shares of stocks means that basically people paid up to $28 per option to own this one, Macy's at $7.50. And they only own it for just under 3 weeks, 2.5 weeks, let's call it. So that's a very bullish trade. They have earnings the 12th of August. That is not covered by this particular trade. They could always roll, I guess. If they're right and it's starting to work, they could roll, meaning exit these, roll out to one that does cover them for earnings. But it doesn't appear to be an earnings play, does it? Seems like people wanting in for a cheap shot on that Barron's article and the person who wrote it having a little insight and maybe being a prescient call about the direction that this one goes. Bang. Here is Macy's, and there you see, wasn't too long ago, just last week at this time, that the stock was basically $7.50. So it wouldn't take a lot to get this one back there, is what a lot of us think. And I think that's why they're buying these calls. So you want to learn more about what we do, you go to marketrebellion.com/UOA. That is marketrebellion.com/UOA. And you can learn all about what we do because we do this for stocks, options, futures, cryptocurrencies. What I've shown you today is unusual option activity, which is why it's under marketrebellion.com/UOA. Unusual option activity. Thank you for joining me, folks. I hope you have a great day. I look forward to being back here with you tomorrow. And until